Welcome all to the node. I am Mike, aka Veteran Crypto. And if you could, on your way in, if you could slap that like, subscribe, and share the stream. If you find anything here valuable, or you like the content, or anything of that nature, we are going to jump right into it. There's a lot going on in the markets right now. And David will be joining us shortly and to give his perspective on some of these stories. But I want to jump in and take a look. Let me go ahead and share my screen. We're just going to go through some of these stories. It looks like this is news that people have known about for a while, but I want to stress this. So Binance suspends EU services by July 1st after failing to secure a mic license. This is big. Binance, a big part of their business is, because there's Binance US and then Binance, and a big part of their business is in the EU. So them not securing that license, potentially, you might want to look at not having your liquidity on that platform. It's
liquidity.
I mean, what impact do you think this is going to have on the markets, David?
I think Europe sucks. Or at least not Europe. But what I want to say here is that unfortunately, the communist governments that are running Europe really suck. They've just regulated away the ability for anyone to do business there. You can't do business there. And obviously that's why Binance is leaving, because the regulations are onerous, and that's the bottom line. So I think, sucks for Europeans, really does.
Well, it looks like Polymarket users lose estimated 3 million in front-end exploit. So hackers injected a malicious code through a compromised third-party vendor and drained roughly 3 million from fewer than 15 Polymarket accounts, the platform's second breach since May. Some Polymarket users have seen their funds stolen after a third-party vendor compromise. On Thursday, according to Polymarket X post, an unnamed third-party vendor was hacked, allowing attackers to inject malicious code into the prediction market's front end.
Yeah, I mean, look, if you're Polymarket, man, they can't be making mistakes like this. It's a massive business now. How in the world, don't they have a team of people whose responsibility it is to make sure that stuff like this doesn't happen? Why don't they have a team of people that are doing that? And if they do, those people need to get fired, man. They failed.
Right?
Yeah.
So PUSD, that's interesting. Let me take a look at this real quick. I'm pretty sure, unless there's somebody else launched another one, PUSD.
Oh, you're thinking it's Plume USD? No, yeah. I don't know. Did they?
No. Polymarket has one called PUSD as well.
Yeah.
Yeah, there's a bunch of PUSDs. There's Palm USD, there's Pay Frequent USD, there's Polymarket USD, there's Pay USD. Yeah, I figured everybody's doing a PUSD. All right, cool. All right. Well, there's that. Let's see what else we got.
Dude, I'm using this runway tool, bro, and it is so amazing. I'm loving trading with this thing. Over the next couple of days, I'll share it with everyone.
All right, perfect. So Aves Stani refutes reported Kraken stake deal, teases new buyback program. This could be interesting. So he pushed back hard on CoinDesk report of a 385 million payword bid, saying Aave Labs holds a token allocation that partners have discussed buying, but that's very different from selling Aave at a 70% discount. A CoinDesk report Thursday said Kraken parent Payward is in talks to acquire a 15% stake in Aave for roughly 35,000 ETH, valuing the company at 385 million, a price that would imply a 70% discount to Aave's current fully diluted token valuation. The report cited three anonymous sources and described a deal structure in which Kraken would receive 250,000 Aave tokens plus a 15% common equity stake in Aave Group, with Kraken also looking to syndicate the deal.
What we're starting to see here, Mike, is more and more of these, large established DeFi protocols start to get valued according to traditional business metrics. Not like, oh, this is a crypto DeFi thing, so Fugazi tokenomics. No. Now you got banks and institutions that are applying DCF cash flow analysis to these different businesses and valuing them based on that. So we saw that with Aave, and Aave was up big earlier today. That when I was looking at it, I think it's up 15%. It's up at 90, 95 almost. So big move for the Aave token, and I think that this is positive because Aave makes money. Even though they're the architecture is hopefully with that V4 singleton architecture is going to be a significant improvement. It looks like it is. Well, that's good. And Aave makes a lot of money, so Aave isn't the only one that's started to get valued like this. Uni has been valued like this. Morpho has been valued like this, evaluated like this. Hype, a piece of research from some bank, about Hype, evaluating them like this. So those four, Aave, Morpho, those are the money markets. Uni, the decentralized exchange. Hype, Hyperliquid, the perpetual futures DEX. I mean, these are four of the biggest money-making protocols in DeFi, full stop. And all of a sudden, they're getting evaluated as if they were like a traditional business. And I think that's nothing but positive. The only thing for me is, man, I think that Bitcoin's going to have one more move down. And so if it does, they're on my shopping list. Aave, Morpho, Uni, Hype. Those are on my shopping list for sure. So I'm looking forward to buying those things maybe at the end of the summer. I think that, from what Ben Cowan is saying about the prophecy analysis, what he's saying is the end of July-ish, we get a rally. And so I'm thinking, all right, well, middle of July, end of July, we get a rally, and then the low is in by October. So end of July, we get a rally. August, September, that's only 60 days. That should be like the final dump. And then we buy in October and buy through November and December and have a great Christmas. That's what I'm thinking.
So DSI, as far as Zcash, we did a deep dive. So if you want to go to the node.pro, our official website, I'll show it real quick, just because there's a lot of, I'm just going to say it, free.
Yeah, I think we can use the word free. Yeah, I like it. That's fine. Fuck it. Yeah.
So basically, if you go to the node.pro and go to the Intel library, you can see, like today we're doing Litecoin and Spark, but all of the deep dives that we do are in here, and one of them is Zcash. So if you want to know kind of what we think about Zcash, go ahead and watch this. You can also watch the episode where we covered it. And the day before, the dump is when we did the Zcash, and myself and David, kind of pointed out some concerns that we had, with it. And again, not to say that because we did a deep dive that it dumped. Obviously there was the potential for an exploit that come the end of July, if they do launch that fix, what they're calling a fix, basically where the 21 million tokens can be moved over to, and if there is still tokens that haven't moved after there's 21 million that have been moved, it will show that there's an exploit. Because of the privacy, there's no way to know, how many tokens are in circulation. And so the only way is for them to do this, what they're calling the fix. And depending on how that goes, it could crash quite a bit further if it comes out that once 21 million tokens are moved over, and there's still people saying, "Hey, I haven't moved my tokens over." That means that there's been somebody that's been minting Zcash, and nobody's known about it. They don't know how long. They don't know how much. There's a lot of risk there, but the potential for some reward. If they do that and it didn't get exploited, then that could be very bullish for it. So you just need to understand what you're investing in, and that's why we're here. We're not here to FUD anything. We're not here to hype anything. We're here to give you the full picture so that whatever you decide to do, you do fully knowledgeable about what you're investing in. Hope that helps.
Yeah. Yeah. I mean, for me, Mike, like Zcash, trust is so important. And I don't trust Zcash. Like, I don't see how you can. Centralized team, core dev is out of his mind. And, I just, like the trust me, bro thing doesn't fly anymore, So I think that Zcash, there's a reason why Arthur Hayes dumped his entire position. And I think the reason is, well, you have no idea what the supply is. So if you have no idea what the supply is, how in the world can you value the coin? You can't. It's just pure speculation at that point. So I would prefer, if I want privacy, I'm going to go with Monero.
Yeah,
that's where I'm going to be.
Well, and I agree, DSI. I like speculative tokens better that are not capped by their revenues. Well, I agree to a point. I actually prefer just good, solid projects with good, solid tokenomics. We here at this channel, we focus on what we call value capture, and that's basically where the token has token holders benefit directly from fees and revenues that are generated by the protocol or the chain through programmatic buybacks and burns, things like that. Things that are hardwired into the mechanics and the tokenomics. I don't like it when they have to be voted on. I don't want it to be some DAO that decides
Right.
if those revenues or fees are distributed to token holders. Hype is a good example. Aerodrome is a good example where the fees generated by the protocol go back to basically buying the token and burning it. And the more fees that are generated, it potentially makes it the token deflationary. It works in reverse too. If the fees aren't outpacing, if the buybacks and burns aren't outpacing the minting of new tokens, then it becomes inflationary. So it's a double-edged sword. But these are the projects that we are focusing on here, and me personally, what I'm investing in. Invest in what you want. I mean, we're just here to educate. We're not here to try to get you to dump your bag of anything or buy a bag of anything. We're just here to basically tell you what it is that we're looking at and how we are investing.
Yeah, man. And I'm just thinking to myself that if I want privacy, I'll go with Monero, not Zcash. And
I was liking that deep dive yesterday.
Yeah. Monero is pretty interesting as a project. I'm looking forward to learning about Spark, just because
I got some news on Spark.
Sweet.
So Uniswap and Spark, FX layer. Uniswap and Spark have launched a unified liquidity network aimed at the stablecoin market. Spark is migrating roughly 150 million in liquidity. Oh, that's you type in. I was like, what is that noise? They have migrated roughly 150 million in liquidity to Uniswap v4, creating a specialized infrastructure for stablecoin swaps, USDS, USDT, PYUSD. The goal is to move beyond simple issuance toward efficient, high volume routing similar to traditional foreign exchange markets. So
Right.
so basically, national.
Mike, can you share your screen for this one, because this is an important piece of news here.
It's not a news article. This is just
Oh,
some information that I
got
found.
it, got it. So the thing about this one, bro, is Uniswap V4, okay, with the hooks, the hook contracts.
Here, I can share this.
We're going to see more and more of this, because Uniswap V4, what it allows institutions, developers to do is fix the problems with liquidity provision. Many of them, anyway. Actually, I mean, really, you could fix all of them with these hooks. There are some really, really big problems with V2 and V3 liquidity provision. You can fix them all with the right hooks.
Yeah.
So I think we're going to see more and more of this. This is probably just the beginning. Yes, Uniswap V4 use has spiked. In fact, it has surpassed V3. And I'm excited about that. I'm building Uniswap V4 into Runway. So yeah, you're going to be able to build, model, backtest, and enter V4 positions in Runway. I should probably build in the hooks too. Allow you to like initiate your own pools with hooks. That'd be cool. But yeah, man, this is good stuff.
So this is on Uniswap's blog. It talks about Spark moving the 150 million of liquidity to V4 with dual pool hook coming soon. So Spark is building the FX layer for stablecoins, and it's happening on Uniswap. They migrated 150 million of stablecoin liquidity to V4, making it one of the largest stablecoin liquidity migrations in DeFi history. Spark will soon move these assets to Dual Pool, a new V4 hook designed in collaboration with Uniswap Labs.
Uniswap, the slop.
Between swaps, Dual Pool keeps idle stablecoin liquidity in Spark's yield-bearing ERC 4626 vaults and moves that capital into Uniswap.
So Mike, let me pause you there real quick. ERC 4626, we see that all over the place. That's the token standard that Euler uses, that Morpho uses, and these are these customizable vaults that you can actually mint tokens against. So I just wanted to jump in about that.
All right, so
it's really cool.
For swappers, it still feels like a normal Uniswap swap. For market makers, LPs, and issuers, it creates a way for stablecoin inventory to support trading while staying productive when it would otherwise be idle.
Right.
So Uniswap. Actually, do you want to dive into that a little bit and kind of
sure.
Explain what that is to the audience?
Super cool. So from a developer's perspective, this is what this means. So if you take the V4 pool with the hook contract, remember the hook you can make the hook do whatever you want it to do. Mm-hmm. So that means if liquidity is sitting idle in a pool, meaning it's not in range, it's not active, you can have that liquidity sitting in an ERC 4626 vault. And if it's sitting in the vault, it can be performing some type of action generating yield. And so what that effectively does is it takes your out of range inactive liquidity, and instead of it just sitting there, we're talking about stable coins, right? So instead of the stables just sitting there, what the stables are going to be doing is actively earning more yield. So, this kind of reminds me of what Fluid was able to do with, treating, liquidity pools as, we're treating lending vaults almost like liquidity pools, like merging the two together. That's kind of sort of what this is. So, yeah, man, this is exciting to me.
Uniswap kind of looks like a good buy right now.
I think so too. I like Uni.
All right. So Uniswap already makes up nearly 60% of all stable-to-stable volumes on major chains we support. With more issuers and pairs coming to market, the stablecoins becoming a larger part of what happens on chain, liquidity needs to become easier to coordinate and more efficient to deploy. Spark is building an FX layer for stablecoins to address this problem. As more stablecoins launch, each new user creates another market that needs its own liquidity, inventory, management, and more. Spark's model is designed to coordinate capital across approved venues and strategies, helping stablecoin liquidity move through shared infrastructure instead of sitting in isolated markets. So it talks about putting idle capital to work with dual pool. So a major challenge with stablecoin liquidity is it is stuck with a trade-off. Capital can sit in a pool and be available for swaps, earning fees when trades happen, or it can sit in a vault and earn yield. Dual pool makes it possible to do both. That's powerful. Between swaps, inventory sits in an ERC 4626 yield vault managed by Spark. When a swap comes in, the hook withdraws only the capital needed for that trade, deploys
Wow.
it as a concentrated liquidity across Spark's configured price ranges, executes the swap, then returns the remaining assets to the vault, along with the fee collected by the LP in the same block.
So cool. So
Yeah,
cool, man. So all
this,
of a sudden you've
yeah.
got, like real utility, like real, you're taking idle assets and putting them to work. It's so cool. Very cool.
No, it really is nice, Jay Z, because this potentially could increase the yield and the earning that you can get because you'll be getting a portion of the fees, and that this is my understanding of it. Correct me if I'm wrong, David. You'll be getting a portion of the fees from the swap, and you'll be earning the yield from the vault.
Correct.
So this is very powerful for those of us in DeFi. It's you don't have to choose between basically if not a whole lot of volume is going on in a liquidity pool, you don't have to just have it sitting idle there. And if you have it sitting in a vault, you're not you're not missing out on high volume. Whenever like a token starts getting a bunch of volume for swaps, you're not going to miss out on that either. So you're kind of getting the best of both worlds.
Yeah, I think that Uniswap V4 plus ERC 4626. Now, where are those vaults like housed or hosted, or what protocol do those vaults live on? They live on Spark,
really
or
good question.
they live on Morpho? They live on Aave V4? I don't think Aave V4. I don't think so. I think it's either Morpho or Euler. And if it's one of the two, it's probably going to be Morpho, not Euler. So, like,
let's play this video and see if it tells us.
Yeah.
So it doesn't have any sound. So the yield vault is in the ERC 4626. That's it, huh? All right. That told us nothing. All right.
So you know what the tool they probably use to make that, maybe anyway, this thing called Open Montage. So just that's as an aside there.
No. I mean, feel free to dive into that because I would be curious where, where this vault, what protocol or how it, what's the mechanics behind this or what's the architecture behind this.
Oh, for making that video content. But for the actual architecture
we're going to be doing
it,
a deep dive on Spark, here in the second half of the show. So maybe we'll learn,
I hope
something
so.
there.
I bet you it lives with Spark. I think it probably does, but I don't know.
All right. Well, let's see if this tells us. Let's see. FX layer, Uniswap V4, Genius Act, how the FX layer works under the hood. Ethereum mainnet, both using Sky's USDS as the base asset. Let's see. I'm not seeing the name of any protocol. Yeah, I'm not seeing any name of any protocol. So, all right. Well, let's move on.
If I had to bet, Mike, I would bet that Spark is maintaining this somewhere. That would be my bet, because anyone can launch ERC 4626.
Well, and Morpho, I mean, and not to say that it's on Morpho, but Morpho is where most, where I've seen most of the institutional vaults are being, curated,
Yep.
Launched and curated. So
Yep.
don't, like I said, I mean, that's just my, if gun to my head, I have to answer, where I think it is. That's where I would think it is.
You know what? It's a 50-50. It's either Spark is running it or Morpho's running it. That's kind of what I think too.
So let's go to stablecoin news, DeFi development. Let's see. Have you ever heard of Tech Dollar?
No.
Yeah, it's saying Tech Dollar has raised $3 million to launch a lending platform that allows employees and founders at pre-IPO startups to borrow against their private equity without having to sell their shares. This is a direct play on the frontier tech RWA narrative. Are we interested in that?
Are we VCs? Like, can we borrow against our shares?
That's kind of why I asked. I'm just kind of like, I don't think that really applies to most of us, so who cares?
I would love to have, enough cash to be able to write $250,000 checks to startup companies, but
right?
that would be a small check too.
Let's see. We got 21 shares mid-year 2026 report. So a new report by BitGet Wallet indicates that prediction markets are emerging as the primary onboarding mechanism for new users. Data suggests that 60% of new users on these platforms have no prior on-chain history, entering the space via real-world outcomes rather than traditional DeFi primitives. Let's go to Business Insider and see what they have to say. All right. So it looks like prediction markets have reached an all-time high daily trading volume in June, driven by World Cup momentum, according to a new report by BitGet Wallet. Based on a 90-day study of 857,000 active Polymarket users, 60% had no prior on-chain trading history before using prediction markets, suggesting the platform is pulling in a new class of mainstream participants, not recycling existing crypto users. Prediction markets are increasingly functioning as an entry point into crypto rather than a niche trading category. I would agree, because Coinbase, even on their platform, has a prediction market now. I ran into it yesterday. I didn't know. I was looking at that STRC that I bought, and I figured out that on Coinbase, I won't get. I'm actually going to move mine over to Robinhood later today, because I don't get the dividends holding it on Coinbase. So, but while I was looking into that, I ran across that you can do have the prediction markets on Coinbase. So the findings suggest a structural shift in crypto onboarding rather than beginning with token trading or DeFi activity. Users are increasingly entering through prediction market applications built around real-world outcomes such as sports, politics, and macro events, with blockchain infrastructure operating largely in the background. But the bigger shift is not just where users enter, it's how their behavior develops once they do. Once onboarded, activity remains highly concentrated within prediction markets. Polymarket heavy users averaged approximately 1,194 prediction market interactions over 90 days, compared with just 11.9 DEX trades in the same period, indicating that prediction markets function as a primary engagement layer rather than a secondary feature of a broader crypto usage. When users do interact with the decentralized finance infrastructure, activity remains structurally conservative. Stablecoins swap the major assets account for the majority of downstream DEX volume, while meme coin exposure represents only around 1% of activity. Despite Polymarket operating on Polygon, only around 6% of users' DEX activity occurs on the same chain, with liquidity instead concentrated on Ethereum-based venues such as Uniswap.
Right.
So that's the core of this story.
So, but here's the thing though, Mike, like, we've got to understand, what are prediction markets? What are they? They are binary options.
It depends on what your definition of prediction markets is.
So what is the underlying contract that you're actually trading and engaging with? It's a binary option. That's what it is. So what people are so addicted to trading on Polymarket, and what people love trading on Polymarket, are binary options. Yes, no options. So, that's why every single one of these exchanges now has, these products. And I can't wait until one of these exchanges, I know Coinbase bought Deribit, but dude, I can't pass KYC. Like, I would love to be able to trade on Deribit, but I can't. I'm an American citizen. I can't pass KYC. And I never set out that Pulau thing. Fuck, thanks for reminding me, Mike. I need to finish setting up my Pulau ID.
Yeah, right. I know Jeff has one.
Yeah, I need to do that. And I would love to be able to trade on Deribit. I don't think they accept Pulau though. So these are binary options that people love trading. And, one thing, and that's something I've got to work into Runway too, is build Polymarket in there so that you can build like a Polymarket bot from within Runway. I've got a bunch of different things that I'm going to build into that, man. But I like Polymarket. I like it a lot. I love trading those binary options. I love betting on sports. It's gambling to me when I'm doing that over there.
Well, but I know that you've used it in some strategies.
So those 15-minute yes/no markets in crypto on Polymarket, and there are specific types of markets on Polymarket where you've got something more akin to an options chain. And when you have that, you can easily pick out like excellent opportunities, because on Polymarket, you're trading against other traders. On Kalshi, you're trading against the house. So Polymarket's decentralized, Kalshi's centralized. So on Polymarket, the decentralization, what that means is, for some of these crypto markets where you've got something more like an options chain, what you can actually do is, there are usually massive inefficiencies, because people they have this long shot bias. So they're going to always go for the home run and always lose. They're going to go for the 10, 20, 50x and always lose. And so when people do that, it skews these markets, it skews certain strikes in those options chains on Polymarket, such that all you've got to do, like if you're an expert options trader like me, and you can glance at a chain and see opportunity, like you can go to Polymarket, bro. And a lot of times there are excellent opportunities just because of long shot bias. People will bid things to the point where statistically it doesn't make any sense. And so you have to take the other side against them because you've got a massive edge. So here's an example. If I'm trading, listed options, and something is, 30 deltas, out of the money. So it's a 30 delta call, let's say. So it's an out of the money call. The 20 delta call should be trading for less. The premium should be lesser than the 30 delta call. And so let's bring that back to Polymarket. Some of these markets on Polymarket, dude, look at the XRP guy enter the chat. I love it. So we could do this on XRP we could do this on XRP on Polymarket. But here's the idea. So a further out of the money call should trade for less than a closer to at the money call, or let's just use option. Doesn't have to be a call. So a really far out of the money option should trade for much less than an option that's closer to at the money. On Polymarket, though, because of the long shot bias, people will sometimes bid up the really far out of the money options because they want to do a 50x return. They see that little calculation in Polymarket where it says, if you put up $10, you could make, a bazillion, gazillion dollars, whatever. And so people, get sucked in by that. And that's why they bid up the far out of the money stuff. So if you see an option really far out of the money that's trading for more than an option that's closer to at the money, that is an obvious opportunity to sell that far out of the money option and then buy that closer to at the money option. And when you do that, you immediately lock in a profit. You immediately are profitable.
Yeah. So, Moneymaker XRP, my understanding, I could be wrong, but it's not the DOJ that's looking into Saylor for securities fraud. There
No,
is some lawyers that are suing him.
right.
It's not a regulatory thing. So
It's Rosenstein, Goldbergstein, and Rosenstein.
it's the Jew trifecta.
Yeah, the Jewish trifecta is
Yeah.
coming after Sailor, bro. He's fucked.
Yeah. So unless you have, like, if you want to post a link to some news or something like that that shows that the DOJ is actually doing it. But I watched a bunch of stuff this morning. There was some rumors floating around that it was the DOJ or some regulatory bodies, and that's not the case. And Moneymaker, I actually posted the link to our official website to the deep dive that we did on Ripple and XRP. You might want to take a look at it. I used to be my largest bag. I had over 40,000 XRP. I was in the top 2 to 3% of holders at one point before RLUSD. And once they launched RLUSD, and I won't get into all the details, and I started really getting into crypto and learning about tokenomics, learning about value capture, learning about just how the tokens are used and what brings them value. Please don't just take what we're saying as FUD. Actually listen and do your own research. Don't just take it at face value. Do your own research, because that's what I did. I was listening to Good Morning Crypto and a bunch of people that were always talking bullish. I was in those echo chambers, and supposedly when the court case between the SEC and Ripple was settled, supposedly we were going to the moon. There was all these events that supposedly were going to take us to the moon, and so finally when it pumped, I sold at $2. It got up to $3 plus, but my average buy-in was in the 30-cent range. And so I took my profits and got out. And I was telling people, take profits, take profits, take profits, when it was still above, $3. And now we're about to potentially drop below $1. So it could go back down into the 30-cent range or lower. So
$1, $3.
Get hyper focused on any token.
I'm short XRP.
Not a bad move.
XRP sucks.
Shorts right now on a lot of things is not a bad move. I mean, I potentially see a lot more downside. I would definitely be short before I'd be long on anything right now.
I mean, yeah, especially XRP, like that thing's just a straight up scam coin.
Here comes David. The chat. We invoked Joe.
We said XRP enough times, and there he is. Yep. Yeah, so, man.
It's important to know what you're invested in, and once if you're fully knowledgeable about what you're invested in and you're still bullish on it, awesome, that's great. We have plenty of people in our community that are invested in XRP, XLM, HBAR, just all the usual ISO suspects. And you know what? There's money to be made in speculative pumps and dumps and the short shorting it, longing it, short term trading it. It's just not something I'm going to buy and hold long term.
No, never.
The tokenomics are terrible. There's no connection between the XRP token and the success of Ripple.
Exactly, and that's the thing we always talk about is like, where's the value? Where's the value accrual? Ginger Prince asking about plasma, dude. I love plasma. The plasma coin, though, not too much. The plasma chain, love it. A layer 1 stable coin chain with a neobank attached to it. The only thing for me that really sucks is I don't have an iPhone, so I can't use their neobank. Like, I was so excited it launched this month. The big mainnet launch for the Plasma One neobank was this month. I was so excited to be able to use it, but I can't because I don't have an iPhone. So I think I found a workaround last night, Mike, actually, where and I see that you posted, in the chat. Look, go to the Node.pro, go to the Intel library. We've got so much deep dive research on these things. I got to make the Intel library searchable now that we've got so many pieces of research in there. But Plasma is super fast. Plasma is super cheap. and they've got what looks like a great neobank attached to it. So,
You get
but
our chat's on fire, dude. So Moneymaker, we actually just did a deep dive on Rise, and it's in our Intel library. Here, I'll post that one too.
yeah, T Rise,
Yeah,
T
no,
T
I,
Rise, T Rise.
I'm very bullish on T Rise.
I like T Rise because I like Canton, and
Yeah,
so I think that that's great. Emerging like base chain and Canton kind of sort of with
yeah,
RWAs, like
yeah.
awesome, love it.
They're kind of, tokenization and kind of bridging that liquidity across Canton and Base.
Liquidity.
Absolutely.
Dude, I've got to get what are those little like boxes that you can press buttons and it's got like little sayings that pop up for viewers so we can hear it. It's called a soundboard. A
Oh,
soundboard.
I mean that's in StreamYard. We like freaking. There's all kinds of stuff that we can freaking.
Oh, dude, we need to build a soundboard for sure. Yes. How did you do that? Where's that from?
You just go to media assets.
Oh, got it. I see. Yeah. Okay.
Yeah, and you can add stuff. Well, and dude, you can do you can do like a background background music. You can do like short videos. So like if you want to have something like that, Drew does it all the time with like his ban hammer. If somebody does something in the chat and he's gonna like give him a temporary ban, then he hits a button and it has like.
Dude, why have we not been doing this? How do you do the video? How do you do the video?
I can show you. I can show you sometime. We can make some.
Yeah. This is cool. I want to do little videos like the hammer that you were just talking about.
Yeah.
Little videos, background music, like little sounds in a soundboard. Yeah, we're doing that. I'm going to build that this weekend for us.
Yeah, no, I mean it's all in StreamYard. We just got to populate.
I didn't know that. Yeah, awesome. That's cool. Yeah. It makes it so much more engaging.
Oh yeah, no, for sure. All right, so yeah, I can't stress enough, and it costs nothing. I mean, that's the beauty of our Intel library and DeFi University is we give it away. There's no catches, there's no gimmicks. I mean, just go in there and freaking. I mean, we do it on stocks like David did Micron the other day, SanDisk. So we do stocks, crypto, crypto protocols, dexes, centralized exchanges. Some projects that don't even have tokens like Fireblocks and Securitize. They're a huge part of the kind of future finance infrastructure. You look at a lot of the major projects that are being built into this new financial system, and you're going to consistently see Fireblocks and Securitize. And so, it's important to understand how these things are put together. The architecture of what's being built, because as you understand how these things are being built, you'll start to see the usual suspects. You'll start to see, what chains are, that keep coming up. You're going to see what protocols are being used for, institutional vaults or, institutional liquidity provision and, things like that. You're going to see, things like Canton, where, it's becoming the interoperability for these siloed networks. Basically the informational, network that these banks and institutions use, where they want to retain the privacy, that opacity, while still allowing liquidity and information to move. So it's important not just to focus on the projects that have tokens that we can invest in, but what is being used to do a lot of the back end functionality. Because if you see that a project is aligning itself, with those technologies like Fireblocks and things like that, potentially you can spot a diamond, an early gem that you can put get a small bag of it, and maybe it's going to be the next Canton, or maybe it's going to be the next the next Morpho, or the next Aerodrome, or the next Uniswap, or the next Aave. You don't know. So it's all about education, and that's why we're here. We're not here to hype or FUD anything. We're just here to educate. How you take that is up to you. Just because we say something negative about a project doesn't mean it's a bad project. I can find something negative about even the most things I'm most bullish on. Canton is one of the projects I'm most bullish on, and I don't like that it's inflationary right now. It sucks that it's inflationary right now, but I understand that, and I understand the potential, and that's why I'm invested in. So anyway, David, what do you got?
So what I got is, you know, I'm trading. I'm fucking making money with this tool that I built, man, and I love it. I love it. But you know what I'm trading right now is I'm looking to trade VBV and lighter. So lighter is the one that I'm interested in. Can you find any news about lighter? Lighter's up 15% today.
Let me look.
Because that, so if we're talking about these perp dexes, right? You got hype, you got a lot of them. There's a lot of them, but I think lighter and aster.
How do you spell lighter?
I think it's. You know what? Good question, man.
L-I-T-E-R or L-I-G-H-T-E-R?
Let me see if I can just find it on DeFi Llama real quick. I think it's L-I-T.
And Ginger Prince, I actually have some news up next on the Solana ecosystem, including Solstice and.
No, it's L-I-G-H. L-I-G-H.
L-I-G-H-T-E-R.
Yeah, and the URL is lighter.xyz. Lighther.xyz. So yeah, there was something.
And it's a protocol.
It's a perp dex, and
so it says in late May, early June, Lighter achieved a major milestone when L2 Beats successfully regenerated all zero knowledge circuits from the project source code. This was a critical step for the protocol as it allows users to independently verify their balances and execute safety exits without needing to trust the project's team or its sequencer. This resolved previous skepticism regarding the protocol's decentralization and custodial nature. Expansion plans. The Lighter CEO confirmed plans to enter the U.S. perpetuals market, identifying a $100 billion opportunity. The team is currently navigating the regulatory landscape, pursuing necessary licensing to operate within the U.S., despite ongoing uncertainty in federal oversight. Ecosystem growth. The Lighter ecosystem recently launched its Brighter initiative, which introduced a Genesis card and a points-based claim system to boost user engagement and liquidity.
So Mike, you see what's going on in the chat here. So Moneymaker XRP. What platform do I use to trade? I trade on Hyperliquid through my own proprietary software called GetRunway.trade. That's where I trade. And Jitto. So yeah,
pleaded guilty.
Yeah, he did. Being a trader, like fucking stealing. What was the information that he sold? What do they call it? Not confidential, but classified. Stealing classified information, using it to write a book. like, dude, you talk about leakers. The reason why the Trump administration, like version 2.0, is so much better than version 1.0 is that in version 1.0, the administration was literally infested with horrible people, like leakers and just pieces of shit. And now version 2.0, I think there's a lot less of that. So that's why it's so much better in version 2.0. But one thing about Bolton was that dude had a crazy ass mustache, man. They call him the walrus, right?
Yeah. He is the walrus, cuckoo, cuckoo.
Yeah.
All right.
And Jitto, Ginger Prince. I'm trading Jitto too. I'm actually long Jitto. So why did it pump bigger? Did it pump more?
Yeah. So let's get into some Solana and Jitto news here. Let's see. So this is here. I'll share this. So Solana ecosystem roundup for May 2026. Let's see. Let's get down to where we got some Jitto and Solstice. Got inflows. Let's see. I mean, this is just kind of going through what's going on. I want to see some newer. Back to news. Let's see. MoneyGram joins Solana developer World Series of Poker.
Oh, so isn't there a chain? Isn't it Monad? Doesn't Monad have a poker DApp where that's like the only thing on the Monad chain that's making money? Is that because I love poker? Poker is and Ginger Prince is saying injective is also popping off. So yeah, we did deep dive research on Monad recently, Mike, didn't we?
Yeah,
I
and
think
we've done deep dive research on injective as well.
Yeah, and so that's in the Intel library, Ginger Prince. But yeah, dude, injective. What's the reason for injective popping off? Probably something to do with RWAs, if I had to guess, because yeah.
So let's see. So basically, what looks like what we're getting on. Where the hell did that go? I had some Solana. Oh, here we go. Solana, where are you at?
Which
Oh, I lost my where I was at with the Solana news.
oh,
So it was talking about Jito. Oh, here we go. So Solana continues to show relative strength with projects like Solstice, XLX, and Jito (JTO) remaining focal points. Solstice institutional yield layer has reached 500 million in TVL shortly after its June launch. So let's go to investing.com and share this. And where is, I'm not seeing the actual news article. So let's go back to here.
So INJ today, Ginger Prince is saying in the chat, INJ. I mean, if I'm just looking on the daily, it's plus 11%. It's basically bouncing off of its 200-day moving average. But
I'm not terribly bullish on injective.
Me neither. Nope. But just for a trade, sure. An 11% bounce. You don't. So these digital assets are so volatile. What I'm learning, Mike, going back and forth with my trading agent Runway, is that it's so easy for me to overestimate my ability when it comes to measuring risk, and especially measuring risk with these extremely volatile digital assets. So what does that mean? It means like you don't need leverage at all. In fact, it's probably a bad idea to use any leverage unless you're trying to speculate. Here's the reason. These assets are so volatile that the expected moves are so big that you can't get to a positive expected value if you're using even 2x leverage. Because with 2x leverage, that means that a very, very small move against you. And if you're trading like intraday stuff, you're going to immediately get closed. You're going to hit your stops.
Yeah.
So like, that's why, when I'm trading with this tool, it keeps telling me like, David, what the fuck are you doing, man? Like, we're not using 100x leverage on this trade.
Yeah.
But it's telling me that even for 2x leverage.
Well,
because
Ginger Prince is saying that CoinMarketCap is saying the primary reason, technical bounce from the oversold levels with price holding key support and momentum indicators turning positive. So, I mean, that's pretty much, I think, what David was saying, where it's bouncing off the EMA.
Yeah, it bounced off the SMA. The EMAs move faster. The SMAs move a little bit slower. Yeah. Some people like EMAs. I like SMAs. Potato, potato.
I'm not a chart guy. I have a basic understanding of some of the terminology and stuff. So
So what's heresy? Heresy, so it sounds like Moneymaker XRP likes, levered long 100x XRP perps. Dude.
I'm liking you already, Moneymaker.
Yeah,
All right.
man, he's cool.
Yeah. No, like I said, I mean, freaking, we welcome everybody here. We're just, like I said, we're just here. We're not here to freaking cater to people's feelings. We're here to give information. And if you got thick skin, you found a good home here.
Well, I
All
see what he said. No leverage. I need my degen itch. So here's the thing, though, bro. Like, I'm not trying to gamble. I'm trading for a living, and so that means that I need to develop my edge, and I need to repeat that over and over and over again in a disciplined way every single day. And so that means there is no, oh, I think I'll use 20x here, leverage, because I know something. Like, I don't know anything, I have no special knowledge of what a coin is going to do on any particular day or hour. It's impossible to know that. I'm not a fucking magician. Like, I don't have a crystal ball. So the only thing that gives me an edge is risk management. And that's why I built it into Runway, so that it can tell me, like, no, David, you're not going to use this leverage, and you're not going all in. Like, it's a risk manager, basically. It's a PhD risk manager. And it's basically made me aware of the fact that I'm really bad at managing risk, because I want to gamble. It's so attractive. But
my problem is I play it way too safe. I tend to just want to buy good projects, and I'll just sit on it. As long as as long as nothing changes with the project, and it doesn't. I don't see anything of concern. Like again, like what I saw with XRP. The whole thesis was that it was going to move value. Cross-border payments, all that stuff, and that XRP needed to be a high valuation. The token needed to be a high value to be able to move the trillions and trillions of dollars it was going to supposedly move cross borders. And they launched ROUSD. And I understand why. Banks and institutions were telling them, we don't want to use a volatile asset to move liquidity, because during the move, if it moves 1 or 2%, when you're moving billions of dollars, you're talking about potentially losing millions of dollars just moving liquidity. And when you're doing that multiple times a day, you can't be sending billions of dollars, and then on the other end they're like, okay, where's the rest of the money? Where's the that $10 million that you're short? So they had to come up with a stable coin, which is RLUSD. So really, it turned XRP for the most part into a really cheap gas token. And RLUSD, last I looked, like 70% of it was on ETH mainnet. It doesn't even use the XRPL or XRP.
So, Mike, one of my favorite things when analyzing protocols is the name of the protocol or the name of the coin. Like, if it has something to do with like losing money or like something bad.
Yeah, like a bottomless void or something
right. Yeah. So like XRP is going to ZERP, zero, nada, nil.
So this is, I highly encourage you, Moneymaker, do your research. Watch our deep dive, but do your research, because this is not the case. ROUSD does not only move with XRP as gas, and because again, a large majority of RLUSD is on ETH mainnet. Also, the gas that is paid to do a transaction, even when it uses XRP, is 0.00001 XRP per transaction. You know how long it would take to even?
It's impossible. It's mathematically impossible.
That XRP is burned, but it would take thousands of years for enough of it to be burned.
Hey, but Mike, what's a couple thousand years here or there? Like, don't worry about it, man.
Well, and it's the same thing with XLM. XLM, what's his name? The dude that left Ripple. He's the one that started XLM and basically built the same fucking thing.
Yeah.
It's XLM is the same cost of gas. It's 0.00001. And I did the math on that because XLM, the max TPS is 4,000, and so I did the math, and it would take it was 5,600 years at max TPS for to burn just 10% of the supply of XLM. So I don't know about you, but I'm not going to be around that long. So, like I said,
10,000 years.
Please
Wow.
do your research.
Yeah. So I'm pretty sure that RLUSD on Ethereum chains does not require any XRP to move. It's just another stable on an EVM chain.
Yep.
And no one uses XRP ledger. And so that means there's no movement of RLUSD. Yep. So let's see. He's saying that RLUSD, there's more on the XRP ledger than on EVM chains. Let's see. Mike, you know what? We could fact check that in just a couple of seconds. That would be really interesting to find out. Go
do what is it? DeFi Llama, I believe, has
it. It might. I bet you. If
I'm going to XRP scan and see what I can find there.
Okay, so I'm on DeFi Llama in the stablecoins tab, and I'm scrolling down here. I found Ripple USD, RLUSD, and the supply of it is 1.57 billion. And he's correct. There is now more circulating on XRP Ledger than on ETH mainnet. 804 million on XRP
awesome.
Ledger. That's great. Great news. Still doesn't change my opinion that XRP and Ripple are scams. But I think that's good. Great. Awesome.
Man. RWA.XYZ.
So I spoke to the team at RWA.XYZ when I wanted to use their data. I wanted to use their API. You know how much those fuckers are charging for that shit? It's like, if you actually want to be able to use it, it's like $3,000 a month. It's like, bro, you get the same data from DeFi Llama damn near for free. It doesn't make any sense.
Well, it looks like I won't be using RWA.XYZ anymore because I'm not paying $50 a month for.
Nope.
Yeah. All right. Well, here, let me share. Let's take a look at this real quick. XRP scan. So this is basically
sorry, I just threw up in my mouth a little bit. We're talking about XRP here.
Yeah.
Ugh, yuck.
I mean, if you're interested in seeing analytics on the XRPL, the XRP ledger, different volumes and things like that, number of payments, from one account to another, if you want to see active users, if you want to see, number of active accounts, this is going to give you an idea if it's, being used more or less over time. And a lot of these, XRP burned his fees. You can see it fell off a cliff back here in August of 2025 and has just been, trending sideways. Not a whole lot of use. Number of transactions executed. It looks like in April, we had a couple of spikes, but been trending off. Before they locked us out on RWA.XYZ, credit where credit is due. The XRP ledger, there's a decent amount of tokenization that's going on. But you need to understand that the value capture that XRP has or doesn't have, and that is that it is pretty much a gas token. And again, each transaction it only costs 0.00001 XRP per transaction. So you can hold XRP for, again, thousands of years, and it's barely gonna put a dent in the supply. And that's what is needed for token price to go up, other than speculative pumps. Me personally, I'm going to go with projects with better tokenomics, with better value capture for the token, like Hype. 100, a large portion of the fees that are generated by the protocol does programmatic or automatic buybacks and burns in real time. That it makes it deflationary. That's why you've seen Hype just going up and to the right. Canton, once the network usage reaches a certain point, it's constantly getting adopted and used. The more that network usage goes up, it's going to reach a point to where it becomes deflationary, and that potentially can pump the price because less and less of the token, and the token has a huge part. And if you want to become a validator or super validator, so JP Morgan Chase, Wells Fargo, all these large institutions and banks, if they want to run a validator or super validator, they have to lock, and this is in their documentation. It's official. They have to lock large amounts of the Canton token to be able to run a validator or super validator. The token is deeply ingrained in the ecosystem. So these are the projects that we are bullish on here. We've had one of the co-founders, Shaw, on for Canton Digital Assets on the show multiple times and interviewed him. Great guy. Their token launch was one of the project. The founders, any VCs, any of the employees, they kept zero tokens. 100% of the tokens was put out to retail. If they have tokens, they were either earned by running a validator or super validator or DApp, or they were bought on the open market. It is one of the fairest token launches I've ever seen in crypto. So, anyway, that's the kind of projects that we look for here. So, David, you want to jump into the deep dives?
Let's do it. All righty. So, got, let me, oh, you know what? I need to open system settings here. So I'm using a new browser here, Mike.
Okay.
It's called Aside. And Aside is, dude, super, super cool. It's basically like imagine having an AI agent built into your browser. But unfortunately, I'm going to need to quit and reopen it because I've never shared my audio, never shared my video before. So I had to enable that in system settings on my Mac. And now I've got to quit and reopen my browser here. But definitely check out Aside. It's the coolest browser that I've ever used. Just amazing. So I got to quit and reopen. I will be right back.
All right. So really quick while he does that, Moneymaker. Yeah. I mean, like I said, I don't have a crystal ball. XRP could, go up and to the right in the future, and it could be an awesome investment. I'm just personally, like I said, we just educate here and talk about what we're doing. We're not influencers. We are not. I'm not a financial advisor. Nothing we say is financial advice. I'm a retired vet that lives in the woods and homesteads, and I've spent the past like 5-6 years, spending most of my days learning about crypto, doing deep dives into these projects, looking into the tokenomics, looking through white papers, trying to share, our experiences, our mistakes, our successes. Me and Jeff started this channel as DeFi Crypto and Airdrops, and David joined us and we rebranded to the Node. It's I've evolved. It's when I first got into crypto, I started with Sheeb, and and I got into a bunch of like early DAOs, and just been learning about these different projects, and different protocols. As we move forward, I've learned a bunch from David. You always need to be open to new information and new data to evolve in all aspects of life, not just in investing. So, all right.
Yeah, man. Let's check this out. So over here at the Node.pro, we're going to hop into the Intel library. And from the Intel library, we're going to take a look at, why don't we take a look at Spark? Actually, you know what? Let's go through Litecoin first, because I just kind of want to watch this. I'm not exactly too bullish on Litecoin, so I just want to watch through it. Not really too much commentary. I want to give us more time to go through Spark, towards the end of the show. So let's watch Litecoin first. Let's just check this one out. All right. And so for anyone who isn't familiar with this, in the Intel library, we've got deep dive research on a bunch of different protocols, projects, coins, tokens, businesses like Micron, stable coins, you name it, all sorts of different, crypto, DeFi, finance research. And, you can go through all of this. We've got not just the written content, but slide decks. If you want to go through a deep dive in the slide deck, we got, the 10,000 foot view, the infographic overview, and of course, the all of the input material, the source material. So yeah, this is super high value stuff. Let's learn about
in March
Litecoin.
2026. The
And
SEC
let me pause this real quick. Mike, were you able to hear that right there when it was
We were able
playing?
to hear it, but it sounded like there was feeding back, like the sound was feeding back.
Right. Yeah, that was my headset. So here we go.
In March 2026, the SEC and CFTC drew a definitive line in the sand, officially classifying Litecoin as a digital commodity. This ruling explicitly insulated the asset from the securities litigation targeting modern proof-of-stake networks. That regulatory clarity unblocked institutional capital. By October 2025, Canary Capital launched the first U.S. spot Litecoin ETF, establishing a regulated pipeline for traditional financial allocation. Publicly traded corporations moved in tandem. Entities like LightStrategy restructured their primary treasury reserves, aggressively accumulating over 929,000 native LTC to hold directly on their balance sheets. This multi-billion-dollar influx relied on a single core engineering claim: structural reliability. Up to this point, Litecoin had maintained a flawless 14-year record of 100% network uptime. This period of institutional expansion collided with a technical crisis. The network suffered its first catastrophic consensus failures following the integration of the Mimblewimble, or MWeb, privacy layer. Adding optional zero-knowledge privacy features to a classic proof-of-work ledger introduced deep validation complexity, cracking a foundation that held firm for over a decade. The consequences hit the ledger immediately. An inflation exploit generated over 85,034 unbacked LTC, followed by a 13-block network reorganization that temporarily froze cross-chain liquidity markets. This sequence of events exposes a structural tension embedded in the protocol's design. To remain a secure, predictable digital commodity, the base layer must resist complex changes. But to capture programmable DeFi yield, the network has to evolve. Litecoin's viability in the 2026 digital economy now hinges on a strict separation of duties. It must isolate all protocol complexity into off-chain execution environments to protect the underlying commodity status of the base ledger. To understand why this separation is necessary, we start with this architectural model, mapping Litecoin's underlying supply mechanics. The base layer enforces an absolute hard cap of 84 million coins, with target block intervals of 2.5 minutes. Over 92% of that total supply is already mined and in active circulation. The emission rate is programmed to tighten further. At block height 3,360,000, projected for July 2027, the network will execute its fourth halving, dropping the block reward to 3.125 LTC and compressing the annual inflation rate down to 0.81%. Securing this declining emission schedule relies on auxiliary proof of work. The network utilizes a merged mining consensus model, where script miners simultaneously process hashes to validate transactions for both Litecoin and Dogecoin. Pooling hashing power across two distinct networks establishes a massive computational baseline, making 51% coordination attacks economically unviable. But this robust security model carries a significant economic drag. Every fraction of a cent collected in Layer 1 transaction fees is routed directly to the proof-of-work miners to offset their hardware depreciation and electricity costs. Unlike modern smart contract platforms, the native protocol contains no fee-burning engines or delegated staking mechanics. High transaction volumes do not shrink the circulating supply, nor do they generate a dividend. Because of this, holding native LTC in cold storage is a purely non-income-bearing strategy. The asset functions strictly as a scarce commodity. To generate returns, corporate treasuries are forced to migrate their capital off the base layer and into adjacent execution layers. The first major attempt to expand the protocol's utility came through the Mimblewimble extension blocks,
What the
designed to
fuck?
offer users
Mimblewimble?
optional privacy shielding.
So here's something that kind of bothers me, Mike. Whenever I see, a protocol, and that protocol like has some ridiculous name, or their website has like crazy marketing stuff on it, it's like, oh man, come on. Like, and for these guys at Litecoin, they're calling one of their modules Mimblewimble. Like, yuck, man.
Without breaking global exchange compliance. Adoption scaled rapidly, pushing the cumulative privacy pool balance to a peak of 402,000 LTC by late 2025. The architectural flaw surfaced in March 2026, when an attacker identified a critical verification bug buried deep within the consensus logic at block height 3,073,882. By manipulating the block connection metadata, the exploit actor tricked the network's accounting rules. A negligible input of roughly 1.5 LTC was spoofed to authorize a massive unbacked pegout of over 85,034 native coins. Containing the threat required an emergency private rollout of a new core software version directly to the mining pools, instructing them to reject the invalid outputs and execute a targeted recovery transaction to retrieve the funds. This incident demonstrated that grafting advanced cryptographic validation onto a legacy proof-of-work chain introduces systemic vulnerabilities capable of breaking fundamental accounting consensus. Furthermore, the initial patch failed to resolve the underlying instability. On April 25th, a secondary entity attempted to replicate the exact same inflation path. While the upgraded nodes successfully identified and rejected the invalid transaction, a bug in the software's handling of the mutated block caused their communication interfaces to freeze entirely. As the upgraded nodes stalled, miners running older software versions continued blindly hashing, generating a completely divergent, invalid ledger history spanning 13 blocks. Consensus was only restored when the F2 Pool Mining Coalition detected the anomaly and redirected majority hash power to mine the correct history, forcing a natural reorganization that wiped out the invalid branch. While the base layer eventually recovered, the temporary chain split severed connections to external infrastructure,
Not
severely
good.
disrupting cross-chain liquidity networks like Thorchain and SwapKit. Base layer instability fractures native consensus and severs connections to critical DeFi infrastructure, making a completely isolated execution environment mandatory for future upgrades. Historically, because the base layer lacked smart contracts, holders seeking yield had to rely on synthetic wrappers, moving their liquidity off-chain onto EVM networks like the BNB chain. We can visualize this bridge approach by looking at the Venus protocol, a decentralized money market where users deposited wrapped LTC to generate compound interest from borrowers. The fatal flaw in this strategy is counterparty risk. In March 2026, an attacker executed a $3.7 million flash loan exploit against Venus using a secondary token. The attack compromised the algorithmic stability of the platform, forcing developers to freeze withdrawals and trapping user collateral, even if their underlying wrapped LTC was never directly targeted.
That sucks.
To eliminate this cross-chain synthetic risk, the ecosystem deployed a structural solution, the Litecoin Virtual Machine, or LitVM, a native Layer 2 zero-knowledge rollup built directly on top of the base protocol. The foundation of this stack is Bitcoin OS, which replaces custodial wrappers with trustless, non-custodial zero-knowledge bridging, securely locking native LTC directly into the rollup. Above the bridge sits Arbitrum Nitro, the execution engine providing full smart contract compatibility. This allows developers to deploy decentralized exchanges and lending markets natively. Finally, Espresso provides decentralized transaction ordering, while Succinct's virtual machine compresses thousands of operations into sub-second cryptographic proofs that are settled securely back on the Layer 1 ledger.
Okay, so one thing that I just want to add here is that, this Layer 1, the Litecoin, right? Isn't this just like a Bitcoin fork? So when Bitcoin, I think so. So when Bitcoin has covenants, this entire stack goes away. You no longer need this entire stack to be able to build on top of the Bitcoin layer one once they enable covenants. So Litecoin, and there's a bunch of side chains on Bitcoin that do something very similar to this. But speaking here about Litecoin, they've built this Bitcoin OS bridge. On top of that, you've got Arbitrum Nitro. And then on top of that, you've got Espresso. So like you've got all of these different pieces of this stack. If any of them fail, you're kind of fucked. And it would all be replaced with cryptographic covenants on Bitcoin layer one. So I'm looking forward to that. Hopefully over the next couple of years that BIP gets approved.
Because LitVM operates exclusively on native LTC for transaction gas, it creates a direct economic link. High volume activity on layer 2 now generates direct demand for the underlying asset. This architectural stack solves the yield paradox. It isolates the complexities of smart contracts off-chain, protecting the core ledger, while finally providing holders with native revenue streams. This chart maps out the definitive 2026 protocol structure for the ecosystem. The native Layer 1 is now strictly optimized as a highly reliable, regulatory-compliant settlement engine. The chain reorganization's structural fragility. Consequently, the strategy for capital allocation has bifurcated. While the base layer generates zero native yield, the new LitVM layer captures value through automated market maker fees and gas utility. As a result, legacy cross-chain strategies are effectively deprecated. The extreme risks of third-party smart contract exploits and Oracle manipulation outweigh the synthetic yield. Compared to high-throughput proof-of-stake networks like Solana, Litecoin lacks protocol-level staking rewards. However, its decentralized proof-of-work design ensures total immunity from the ongoing securities litigation suppressing those competitors. The final competitive hurdle is transaction speed. Outpacing the sub-cent fees of Bitcoin's Lightning Network will depend entirely on how rapidly developers migrate liquidity into the new rollup. Ultimately, Litecoin's survival relies on maintaining a dual identity. It must remain a sterile, mathematically rigid digital commodity at its core, while trusting its entire programmable, yield-bearing future to the LitVM ecosystem.
I mean, LitVM, is there even anything going on there? I don't think so. And then, if we just take a look real quick, Mike, over at like coin market cap, if we just check this out. So here's coin market cap, right? And then if we go ahead and scroll down a little ways here, I'm looking for Litecoin. I think it's in the top. Oh my God, it's number 23. So a $3 billion market cap. And I'm just like left scratching my head, like what for? 3.2 billion for what? What does this do?
Well, and what does what revenue is it generating? What fees does it generate? Is there anything that makes it deflationary or in any meaningful way? There's a lot of these projects that I see a lot of these market caps and a lot of these valuations as pure speculation.
Yeah, same thing with Bitcoin Cash. Like I don't see the product market fit. I don't see the use case for those two. I think both of these are just like Bitcoin forks. Pretty sure, Litecoin and Bitcoin Cash, that they're just Bitcoin forks. So tough for me to get excited about a Bitcoin fork. I want to hold the real McCoy, and the real McCoy is Bitcoin, not Litecoin, not Bitcoin Cash. Okay, so now that we've gone through that little bit of research there on Litecoin, let's bring it back to the Intel library, Mike, and let's take a look at Spark. Spark, I think this is going to be interesting. And also, let me know if you can hear this, because I got that warning saying that my audio was disconnected. So just let me know if you can't hear it.
No.
Gotcha. Okay. Let me go ahead and restart that screen share. I got to say, I am really liking this new browser. This browser, man, is it's called Aside. It's by far the best browser I've ever used.
Finance sector operates by mid 2026. The decentralized finance sector operates as a mature, automated machine. Institutional capital flows through programmable, on chain routing networks at immense scale. At the center of this infrastructure sits Spark. Incubated within the Sky ecosystem, formerly MakerDAO, Spark has secured its position as the second largest money market in all of DeFi. The protocol maintains approximately 12 billion.
Okay, so what did it say about MakerDAO again, right there? Let me back this up.
Programmable on-chain routing networks at immense scale. At the center of this infrastructure sits Spark. Incubated within the Sky ecosystem, formerly MakerDAO, Spark has secured its position as the second largest money market in all of DeFi.
Okay, so MakerDAO launched DAI, the stablecoin that over-collateralized crypto-backed stablecoin. That was not compliant. Regulatory, it's not compliant with regulations. And so what they did is they rebranded to Sky Money and then launched USDS, which is one of these compliant stablecoins. And it looks like Spark is the money market that was incubated within MakerDAO. Okay, so now I'm starting to understand how this fits in.
The protocol maintains approximately $12 billion in total value locked across its primary product lines. In the first quarter of 2026, it reported a 42% net margin, generating $18 million in net income and growing its treasury assets to $145 million. This dashboard illustrates the central anomaly of the protocol. On the left, we see Spark's operational growth, expanding TVL, rising treasury reserves, and high margins. On the right, we see the spot price of Spark's native governance token, SPK, caught in a persistent long-term downward trend.
Uh-oh, so the word that I heard there was governance token. And Mike, do you have any examples just off the top of your head of a governance token that has performed well?
Well, I mean, it's performed well, but not, it's from pure speculation. You got Ondo, and it's nothing, but a governance token. But a lot of people out there don't understand that, and they see bullish news about Ondo Finance or Ondo the chain and all the tokenization that's going on and all the great things. And trust me, they are. I mean, they're doing great things, but they don't understand that the token has nothing to do with that.
I mean, so I can't think of a single pure governance play that has performed well. I can't think of a single one.
This divergence between operational growth and market valuation results from the collision between strict global regulatory frameworks and an aggressive token supply schedule. Understanding why protocol revenue fails to support the token price requires a deconstruction of Spark's underlying architecture to trace exactly where the capital actually flows. Spark functions as a multi-chain yield middleware. Its architecture is modular, split into 3 distinct product pillars that isolate risk while seeking capital efficiency. The first pillar is Spark Lend, the protocol's primary lending engine. It operates as a specialized USDC-centric money market. This flowchart maps Spark Lend's siloed risk architecture. Instead of pooling assets, USDC liquidity routes into independent lending pools for collateral like wrapped Bitcoin or Ether. If market drops force liquidations in the Ether pool, containment holds. Walled-off pools ensure the event cannot spread. The second pillar handles institutional deposits.
Okay, so I just want to back it up on this for a second, because this is super important. So during a bull market, I'd be willing to bet, because in the previous bull, there were some amazing yields to be had on USDS. So, and SUSDS, which is, I think, another version of it. I think it's like the safety module one or something like that.
I thought it was a staked version.
It could be. I don't know. Maybe it's in this video.
Well, and there's so many. I mean, we were PUSD. I pulled that up because I thought that they were talking about Plume early on in the show, and there's like 5 different PUSDs.
Yeah, it was the poly market USD. But for USDS, the Sky Money product, they've got like it's either a staking module or a security module or something like that, and you can earn like additional yield on it. So this WBTC, this ETH, when we're in the next bull, USDS might be a great place to go for some nice stablecoin yields and potentially levered stablecoin yields. Take a look at Gearbox. Gearbox is a money market, a lend borrow protocol where you can lever up Sky Money's products, this USDS.
Sets USDC liquidity routes into independent lending pools for collateral like wrapped Bitcoin or Ether. If market drops force liquidations in the Ether pool, containment holds. Walled-off pools ensure the event cannot spread. The second pillar handles institutional deposits, Spark Savings. This layer provides non-custodial treasuries using the ERC 4626 vault standard. While native Sky vaults earn yield directly from the Sky Savings rate, Spark Savings bypasses this direct mechanism. Instead of relying on the Sky balance sheet, Spark Savings funnels its underlying assets into the third pillar, the Spark Liquidity Layer, or SLL. The SLL acts as the protocol's automated capital allocator. It programmatically directs stablecoins sourced from Sky reserves out into external, whitelisted DeFi protocols and over-collateralized real-world asset credit channels to capture market yields. Because this involves interacting with external contracts, the security framework relies on strict governance controls.
We were talking about this before. It looks like that Spark is using Morpho and some of these other ones to to curate the vaults.
Yeah. So
So we were talking about earlier where
it's not the curation of the vault. What they're doing is they're using these protocols to generate yield for Spark Savings holders. So it looks like the curation of the vaults, from what I've seen so far in this content, is actually done by Spark. But that they do
but that's how Morpho works. Is it has like a curator that basically manages the vault and the liquidity and the assets in that vault. And so my guess would be that Spark is like it's showing here using Morpho and Aave and Curve to in different ways to basically lever up almost. And I don't know if that's the right terminology, but it's using both vaults and liquidity pools. But it's let's go ahead and finish it, but we'll talk about it after. But I found it really interesting that they're able to use the same liquidity in both vaults and for liquidity provision on swaps.
Yeah, let's check it out.
Calls and over-collateralized real-world asset credit channels to capture market yields. Because this involves interacting with external contracts, the security framework relies on strict governance controls. Designated freezer addresses have the authority to instantly halt all capital movement during an emergency. To mitigate liquidity fragmentation, Spark executes this routing across multiple networks simultaneously, deploying on Ethereum mainnet, Base, Arbitrum, and other chains. By compartmentalizing cross-pool risk and directing billions of dollars across multiple blockchains, Spark has established a functioning yield engine. The protocol's performance is clear. The depression of the SPK token is a systemic issue. If these three pillars are generating millions of dollars in quarterly net income, the question is why 0% of that cash flow accrues to SPK token holders.
See, we're always talking about this, Mike. Well, why is it that if I'm going to hold a token and the underlying protocol, that business generates revenue, why do I not get any of that money? Where's my money? When
if I'm providing liquidity for you to grow your business and do different things, if I'm helping you grow the business, where's my return on investment?
Right. Like if I'm taking risk, being exposed to your token, I need to get compensated for that risk that I'm assuming. And you're not, So Spark, it's like there's so many questions around like governance coins, right? Because it's not equity. What's the point of the coin? Why does it even need a price in dollars at all? So I guess you could say that there is value in governing a protocol, but the problem is if it's a fake DAO, right? So like if you've got this governance coin and it's supposed to manage the protocol, but 99% of governance tokens are held by one dude or the core team, then it's an FDAO. It's a fake DAO, a Fugazi DAO. It's not real, and the governance is not real either. So, but just taking a look at the Spark coin or token, excuse me, this Spark token, this is not good, but could it rally a little bit if there's some type of speculative pressure? Maybe. I mean, it looks to me like there might be some resistance here at the 200-day moving average at 2.39 cents. That's a long ways from 1.7 cents. So yeah, this one does not look good to me. So let's continue on with the video.
This legal document illustrates the primary constraint. The European Union's Markets in Crypto Assets Regulation, known as MiCA, dictates
this fucking Euro commies running the people in the EU, who those people running the EU, like those people suck because all they've done is stifle innovation in the European economic zone. That used to be on par in terms of GDP, or at least close with the United States. Now, ever since the EU was instituted, all it's done in terms of GDP for the economic zone there in Europe has made it go down. It's been growth negative. They've seen negative growth over in the EU because of the communist policies that they run there.
The token's structural limits. To maintain legal compliance across global jurisdictions, SPK is designed as a non-security utility asset. The protocol's white paper states that SPK token holders possess no ownership rights, profit rights, or direct financial claims against Spark.
So why hold it?
This flow diagram shows the result of that compliance.
I want to know.
Spark cannot distribute protocol fees as direct dividends to users. Instead, revenue routes into a programmatic SPK buyback program. This indirect mechanism acquires tokens on the open market to support treasury reserves, avoiding security classification. The MiCA firewall allowed Spark to operate within regulated global markets, but it severs the direct economic link between protocol profit and token holder yield, leaving the SPK price reliant on indirect buybacks. Indirect buybacks only support the price if the market supply remains controlled. For SPK, the supply mechanics push in the opposite direction. At Genesis, the SPK token was minted with a hard maximum supply of 10 billion tokens. This stacked area graph tracks supply distribution. 65% is dedicated to the sky farming campaign to bootstrap liquidity. This emission schedule halves its rate every 2 years. Throughout 2026, millions of new SPK tokens enter circulation daily. This continuous token generation creates an inflationary headwind, acting as a downward force on the token's spot price that open market buybacks struggle to counteract. To absorb this inflation, the protocol utilizes the symbiotic shared security staking infrastructure. Users can lock their newly emitted SPK into the symbiotic node. This programmatically secures the external token bridges required for cross-chain transfers within the Spark liquidity layer. However, users who lock their capital receive non-redeemable Spark points and a liquid representation of their deposit called STSPK. Currently, they receive no direct cash flow yield for providing this security. The current tokenomics require users to absorb a decade of supply expansion to secure the protocol's bridges, while receiving abstract points in return.
What the hell's the point of that?
What's the point of points?
It's no pun intended. So what this research is telling us is run in the opposite direction from holding this thing.
That's what I'm seeing so far.
Me too.
Continues the downward price pressure until a cash flow catalyst is introduced. The planned strategic resolution for token dilution and yield fatigue is the rollout of the broader Sky Atlas framework. This diagram illustrates the sealed activation upgrade, allowing users to structurally seal their governance tokens inside the protocol. This establishes a claim on the ecosystem's yield. The protocol then pays rewards directly in USDS stablecoins or joint Sky Star tokens, making SPK a productive instrument. While activation addresses internal dilution,
Okay, so let's go back through that again. This is the important thing.
illustrates the sealed activation upgrade, allowing users to structurally seal their governance tokens inside the protocol. This establishes a claim on the ecosystem's yield. The protocol then pays rewards directly in USDS stablecoins.
Okay, so you can seal. They use interesting terminology here. You can seal your governance tokens inside the protocol to then earn USDS. USDS is cash. So what's that yield? And if you've got the risk of holding the Sky governance token, which has done nothing but go down and to the right, lose value in dollars. If you're holding something that is depreciating and you're earning cash flows that are negligible, what's the point? Unless this thing is paying like 100% APY, like why even bother? Unless you're bullish on holding the governance token for some reason, which I don't know why you would be, but.
Or joint Sky Star tokens, making SPK a productive instrument. While activation addresses internal dilution, Spark's entire operational existence relies on one external dependency, the stability of the SkyPeg stability module. All liquidity routing and TVL is tethered to the USDS stablecoin. Any regulatory action, exploit, or peg failure within the Sky ecosystem would cause an immediate collapse of Spark's lending and savings pillars.
Ugh.
Spark operates as a core liquidity and yield infrastructure layer for its ecosystem, yet its survival depends on a delicate race. It must activate direct token yield before inflationary dilution compromises its security layer, all while the Sky ecosystem peg remains intact.
Dude, wow. There's a lot of risk there that I had no idea about. Let's take a look at DeFi Llama. Let's bring it to DeFi Llama, and let's just take a look at Spark. So Spark, this is, I think this is top 5 protocols on just in general. So if we take a look if we just go back to the homepage here and scroll down, so you got Lido, Aave, Morpho. Wow, Morpho's number 3 by TVL now. That's amazing. And there's Sky, and there's Spark. Spark's number 7. So Spark is one of the largest DeFi protocols out there. And TVL has grown over time. That's great. Great to see that. So let's check out the website.
But again, no matter how successful it is, as a token holder, what does that mean for me?
Exactly. And why would you want to hold this thing?
Don't get me wrong. I'll probably end up using Spark, the Spark platform, but it doesn't mean I'm going to buy the token.
Yeah, they're talking about points here. Like, so I want.
What do the points do? So you say you earn 1 million points. What does that fucking do?
You get a purple gold star badge or something.
I don't know. That's kind of what I'm curious about. It's like, is there an airdrop, from these massive amount of tokens that looks like, or that are going to be dropped?
We didn't get anything, about an airdrop.
A 3x multiplier on points. It's like having, 3 times the amount of worthless, freaking points. That doesn't really incentivize me. So, I don't see anywhere where it talks about what the points are used for.
And so here's something else that you've got to think about whenever you're, analyzing these DeFi protocols. You've got to think about, what is the risk-free rate? Like, what is your opportunity cost? Because if you know that you can head on over to a protocol, or you can just go to your bank and buy, 90-day treasury bills, and they're paying, like, I think greater than 4%. So, like, if you're going to take on all of the risks associated with depositing your cash into one of these yield generating products like this Sky protocol, like, and you're only going to get paid 3.6% for doing that, like, why would you do that? If you have to keep your cash on chain, okay, that's fine. But if you can move in between TradFi and DeFi, like, I don't see why you would want 3.6%. It's not enough. Like, you need to get paid more for taking on this risk.
Yeah.
And then for something like DAI, DAI, 1.25%, get out of here with that bullshit. And then here's the Sky staked USDS. So like 13%, deposit your USDS and earn 13%. I mean, that makes a lot more sense to me. Am I going to be locked up in this though? Risk gating. Okay, yield-bearing vault. Am I locked up here for a period of time? Single collateral asset is the Sky governance token. So how does that make sense? If I deposit USDS, does that mean that I could like lose value here? Are
they saying it's backed by the Sky token?
That's what they just said. Yeah.
Yeah. No thanks.
Yeah, I don't know about all that.
I mean, I don't see the risk being worth 13% APY.
The juice isn't worth the squeeze.
No.
In this case here. And
that's just what I'm understanding from what you just showed.
Yeah, me too. But it's worse than that. There's a ton of regulatory risk with this protocol. You saw how they were just willing to bend the knee to those communists in the EU. Yeah. So like you can't allocate capital to this thing. I don't care that it's number 7 in DeFi TVL. How many projects and protocols have we seen rise into the top 10 only to end up giving it back? Yeah. Sky protocol, this one used to be MakerDAO. This used to be like a somewhat of a DeFi crypto native protocol. Now it just seems like this is TradFi on chain. So like that kind of sucks. Oh well, I thought that I was going to be impressed by this one, and I'm not. I'm kind of disappointed. Let's take a look at Gearbox, because over on Gearbox, I know that there are ways to easily lever up. Oh man, look at how that TVL collapsed. I think the reason why the TVL collapsed is Gearbox was like, it had a big integration with Dolomite. And Dolomite was all about Berachain. And so Berachain looks like it's dying. And so Dolomite's TVL has just collapsed. And I think that that's probably why Gearbox TVL has collapsed too. But Gearbox has, there are opportunities here on Arbitrum. So I'm looking here at Earn. I don't want to be on Earn. I want to be on Farm. They call it a farm here. So they call this yield farming. This is interest rate arbitrage is what this is. So I'm looking for the Sky. I'm looking for Sky. And you've got Curve, Lido, Rocket Pool, EtherFi, Convex, ETH Plus, and Beefy. And, like if you're okay with this type of risk, you could do 135% maybe, but I don't see Sky over here anymore. That used to be one of their, maybe like 6-9 months ago on Gearbox. This, that Sky savings rate was something that you could farm with a lot of success. You could do like 75% for a couple of months over there on Gearbox, but no longer. So that's a shame. Looks like, it's Mike, it's so valuable to go through and do this deep dive research, like learning, because mostly, when I'm taking a look at crypto DeFi projects, for the vast majority of opportunities, you should be saying no. You should be saying, hey, you know what? I'm going to pass. And so that's what we learned together is, we learn that even stuff in the top 10 in terms of DeFi TVL probably should be a hard pass. So that's all I got, man. You want to let's run through socials
Yeah.
in the last couple minutes we got.
No, it's no, and one thing I do want to say about it all too is just that you can be bullish on a protocol or a chain. It's just, but you really need to understand what it means to hold the token. This is a good example. The Sky protocol. It very well there could be some great opportunities. To earn on there. Doing advanced strategies or something like that. But from what we saw, and again, we could have gotten some things wrong. Do your own research, but I was not impressed with what I saw with the tokenomics. Highly inflationary. The only thing that you can really do with it is stake it, and in staked it's backed by the Sky token, and you're not really earning a whole lot, and on top of that, yeah, I didn't see anything that made my ears perk up and made me think, oh, I need to friggin' build a bag of this. So anyway, let's
Me neither.
pop over here. So if you want to follow us, if you want to check out the chat, if you want to chat with us, I know that Moneymaker XRP, I know he had to go, but greatly appreciate the input that he gave. It sounds like very level-headed dude. I'm guessing it's a dude. But that's what we encourage here. But if you want to join the chat, come on over here to YouTube, and you can follow us at the Node Network, all one word. Appreciate all of you helping us grow. I've been very impressed with all of you, and kind of the growth that you've helped us with. While a lot of channels are out there shrinking, interest is at all-time lows, and we're still gaining subscribers. So thank you very much for that. We greatly appreciate it. It's what fuels us to keep doing this every day. So that's where you can follow us there. If you want to follow us on X, then you can find us at the Node_network. And last and definitely not least is our official website, thenode.pro. So this is where you find everything, all of our free stuff. I mean, I cannot stress this enough. I can't think of another channel out there that gives away as much value as we do here. And a lot of that is thanks to Dave. He built out DeFi University before we even started the node, and very graciously donated that value to the channel and the community. There is no catches, no gimmicks. He built that out. It's modules. It's professionally structured. There's tests and quizzes and checks on learning. Just like our deep dives, there's audio where if you need to drive or work, you want to listen to it in the background. There's video if you're a visual learner. There's reading material. There's slide decks. All of this, the structure is the same. But again, no cost. The Intel library, again, no cost. We, I spend about an hour or two building these out, each evening or each morning, the two that we're going to use, and we add two new ones Monday through Friday. So there's 10 every week. There's 10 new deep dives. Plus, Jeff has been posting like Dominion Finance, Bye Bye Protocol. These are early gems. Oh, potentially early gems. They're early projects. Jeff is our subject matter expert on airdrops. He has been great at finding early projects that have potential. So he is posting those in here as well. So love seeing those being added now. As always, we can get things wrong. Yes, we use AI. However, we also, a lot of it I go through and I manually check. Every bit of information, we cite our sources. If you go to the source document, like if you go into Spark and you scroll down, at the very bottom, you have the slide deck, the infographic, and the source document. If you go to the last page or the last couple of pages, you're going to see all of these is where we got the information that populates these deep dives. So we don't just make these claims. These claims come from from CryptoRank. They come from different forums like Superfluid forums, from SparkFi. This is from their official documentation. This is super valuable information. Yes, potentially. Can it get things wrong? Absolutely. I try to find that. And if you find something that's wrong, go into our Discord, come into the chat, message me on X. More than happy to make adjustments. But we stand by our product because, again, we cite our sources. You can get butthurt. You can get pissed because we talked bad about the project. You can call us names if you want. It doesn't change the facts. If you have an issue with the information we put out, all I ask is that you give me, cite a source that shows we're wrong, and I am more than happy to change it. So, AI newsletter, again, free. You can try out the newsletter. There's a lot of value here. Do you need to check and verify? Absolutely, as you should with everything. We hyperlink everything in the newsletter. All the news articles, the social media posts, where we get the numbers, all of it is all we cite our sources. We practice what we preach here. So great tool. Once David has it dialed in, it's going to be $20 a month. Community, again, free. Many channels charge for their Discord. Ours is no cost. There is one channel in there that is for premium live calls, but you get a free trial. Are you seeing a pattern here? I can't stress that we are not hiding all of this stuff behind a paywall and telling you, trust us, bro. That you pay us $10,000 and I promise you're going to get value. We put it all out there. So it's $99 a month if you like what you see during the 3 weekly live calls. But you can do a week with no obligation. Sit through a Monday, Wednesday, and Friday call. See if you get value. If you see the value there, get it. If you don't. It's that simple. The store. If you simply just want to support the channel because you think that we're entertaining or we give out good value, good information, by all means, please come in here. If you see a hoodie you like, a T-shirt, a jacket, a hat, whatever, we greatly appreciate the support. Any support that you all give us, we greatly appreciate.
Buy all the things. Buy them all.
Here is the learning. It's this is the DeFi University. Gives you all the different steps, gives you where to start, all of that. Excuse me, I got to sneeze.
It's our Leering Center.
It's our Leering Center. If you want to know the shows, this is a calendar under more and programming. You can see today. Later on today, David will be doing the daily market wrap. He has his live call. Later on today, that's that paid live call, or if you want to do the trial. And tonight, me and Jeff will be doing crypto and chill and just having some drinks and talking about the markets. Saturdays and Sundays, we also have shows. Actually, Sunday, we did away with gaming and chill. We just do that on Wednesdays. But coaching, if you want to take your DeFi investing.
And actually, Mike, for the coaching, because I just completely rebuilt the coaching program.
Okay.
Can you hop on over real quick, if you don't mind, to defiuniversity.xyz and then click on coaching, because that's where the coaching lives. And I'm going to be finishing the newsletter and finishing the everything to do with the Node.pro here too. But if you click on the top there where it says coaching, and then maybe just zoom in once so that people can see it up in the very top there.
Yeah, I already did. That's where I'm at.
Awesome. Yeah, so this is the new coaching page. So if you just scroll down through this a little bit, this is what's up. This is if you keep scrolling down through it pretty slowly. This is I spent a lot of time updating this.
He maps your current portfolio, risk exposure, and knowledge gaps into the baseline. 2, he strategizes with you, and this is one-on-one. He builds a personalized DeFi strategy and risk parameter profile tailored to your capital and your goals. And step 3 is execute, self-custody setup, position sizing, and repeatable due diligence process for every protocol. And this is over weeks. This is, he has regular calls with you one-on-one, video calls with you, and goes over your progress, gives you homework, things like that. And then step 4, compound. Weekly or bi-weekly sessions, refine your edge as markets evolve. You leave with judgment, not tips.
Yep. And if you keep scrolling down here, so what I've included with this is access to Runway. And Runway is, over the weekend, I'm going to have some really exciting stuff. I'm going to see if I can finish, because I'll get more, tokens unlocked to me over the weekend on Saturday, which means that I'll have a smarter model that I'll be able to use to finish that newsletter, so that we've got something to go through when it comes to the news every day. It's really, really close, just a couple of tweaks, and then it's done. And then
and again, free trial. We don't hide things here. We let you try them out. We let you test drive them. And if you find value, then buy it. If you don't.
Yeah. So, I mean, this coaching, though, getting access to Runway, as a private coaching client,
will pay for itself.
That's worth the price of admission right there, man. Yeah. So.
No, it's, I can't stress it enough. We are not like other channels out there. Most channels would charge for all of this. And you would have to pay to get access to it to see it. Everything that we have is either no cost at all, or there's a free trial for it, to where you can, like I said, try it out. And if it makes you money, if you see the value there, if it helps educate you or make you make better investing decisions, then buy it. But if you don't see the value, again, we don't want you to buy something unless you find value in it, unless it brings you value. So anyway, but last but not least, the thing that helps us the most is hitting the like. Go down, if you're on YouTube, hit the like, hit the subscribe, share the channel, help others out there find this channel, because there is so many channels out there that are just going to tell you what you want to hear and what people want to hear, because they want your engagement, because that's how they make money. They make money off how many people watch, how many people subscribe, how many people go to whatever decentralized exchange or centralized exchange that that is paying them for them to promote. We are not like that. If you haven't noticed, we don't have any exchanges. I get emails daily of exchanges wanting us to promote them for money, and we don't do any of that. We are not the same. We believe in integrity here. We want people to be successful. We're not going to shill a project because we're paid to. We're not going to FUD a project because we're paid to. The way that we make money is if you find value and you choose to support the channel. That's it. So
it's a value for value model.
Exactly. So with that, David, thank you as always. Thank you to all of you out there, and hope that you join David for the market wrap later and Crypto and Chill with me and Jeff tonight. Until then, Veteran Crypto out.
Peace.